Hi, my name is Madhav. My student ID is EMB30142. Today I'm going to present regarding my corporate accounting's individual assignments, which is related to cash flow statement of different three companies and the content that are included in cash flow statement and the income statements, as well as which sections the investors gives most priority and most concern before their investment. Let me start with my assignment sections, which has two sections, part A and part B. Part A is related to the content included in income statement and why these contents are important for in investors on different perspectives. Let me give start with briefing of these contents. The cash flow statement has we can calculate cash flow statement from two way: direct direct method of calculation and indirect method of calculation. And direct method of calculations where we just directly calculate cash flow increment, whether the increasing or decreasing of inventories, receivables, payables. And also for indirect method, we start with net profit after tax, and then we add non-cash expenses like depreciations, and also we subtract the gains and proceeds. And cash flow from investing is related to the investment in fixed assets like PPE, plant, property, and equipment. Also, the investment in other share equity, and also cash flow from financing is related to investment in equity capitals of the companies and payment of dividends. And we just calculate the net figures of these three: the cash flow from operating, cash flow from financing, and cash flow from investing. Then we add the cash balance at the beginning of the year, and then we calculate the cash balance at the end of the years. Okay. And also for the income statement, investors give, it's just the investor first calculate the net profit after tax, which is just the calculations of the subtraction of net income and net expenses. And then we got net profit after tax after paying tax at the income tax. And then the section 2 of section part B of the assignment is related to the evaluation of cash flow statement of three companies: BSV Limited, Santos Limited, and Funastic Limited. BSV Limited, if we see the sources of fund for BSV Limited, which is interest and dividends for these companies, it means that the company has more retained earnings, and the company pay dividend from retained earnings. And usage of fund is inventories, provisions, pay taxes, purchase, PPE, and dividend payment. And also for the Santos Limited cash flow sources of cash flow is around 4,266 million. And also for the Santos Limited, the income, interest, and dividend, but less in than BSP Limited. And it's also the usage of fund is payment to supplier, operating expenses, also pay tax, interest, etc. And for Funastic Limited has negative negative cash flow of Funastic Limited. Its major sources of fund is proceeds, like proceeds from sale, because the company already is in loss and the company sells the equipment and different property equipment on proceeds. Also the borrowings is the major sources of Funastic Limited. If we evaluate the trend of the companies, there is increasing trend for BSP 17, 18, and 19, which is 10,625 to 18,461 million. There is increasing trend for BSP Limited, which is financially seems like if we see with open eyes, it looks positive for investment, because they have cash flow from operation always positive and always increasing, and the company paid dividend to the shareholders. Also the company has retained and invest in most profitable lucrative projects That's why the BHP Limited looks the if we see the trend, the BHP Limited is better for investment in investing perspectives. For the Santos Limited, the net cash flow from Santos is also positive, but which is not as profitable as BHP Limited. For the Funastic Limited, it has negative cash flow from operations. It means that the company has more cash outflow than inflow. It has negative cash flow from operation. It means that it is not the company has less amount of money for less amount of cash in hand for investment or for operation of its day-to-day operating activities. If we if we see the BHP and Santos, they can cover capital expenditure easily because they have positive cash flow from operation and positive cash flow statement. But for the they can pay employees more to supplier, dividend to employees, but for Funastic it's hard for them to cover capital expenditure. So let's see what would gonna happen because the the BHP and Santos has excess cash generation. Of course, they utilize the cash that generated cash. For Santos, they purchase the treasury bond from the market and purchase also purchase of fixed assets. For the BSP, they invest equity. They have equity investments. Also, they have for BSP. Yeah, for the BSP Limited, they have one employee share ownership plan. That's also better for the potential investors for investment perspectives because it's giving the employees share ownership plan as well. Okay, if we see the overall if evaluations of the cash flow statements, the major item affected by cash flow of these three companies. Of course, the income statements affect the cash flow statement because the incomes generated is or income in hand is directly related with the cash flow statement. I mean, that item goes to the cash flow statements. Increase and decrease in working capital also impact the cash flow statements. Like decrease in working capital, it means like receivables, payables, short-term receivables, short-term payables, inventories, marketable securities. These items also affect the cash flow statements. Working capital in the sense that the cash management skills of the companies, and also like cash conversion cycles, that if the payment, the companies should delay the payment, and if the receivables, the companies should call it receivable as much as possible. And also the company, the inventories, if the company has excess inventories, then its excess inventories will increase its storage cost. So the company has better economic order quantity as well for managing inventories and receivables, payables, I said earlier. Also capital expenditure invested also affects the cash flow statements. It negatively affects if we buy more fixed assets, plant, property and equipment, because Santos has more PPE in 2019 than 2018 if we see from cash flow from investing activities. But BSP also the same, but Funastic has negative investment in cash flow from investing activities, negative investments. Dividend trend for the two companies has payment of dividend trend is increasing, but no dividend has been seen. The trend borrowing trend, BSP borrowing is increasing and Santos Limited also borrowing is increasing, but Funastic Limited borrowing in 2018 it's decreasing. BSP's receivables is decreasing in 17, 18, also as well as inventories. For the overall recommendations, the BHP has less fluctuations and consistency in cash flow statement, and is better for the investment as compared to the other Santos and Funastic. But Santos Limited is also better for the investment because they have positive cash flow, but not the high amount as with BHP Limited. Funastic issued more share, but they have cash held and cash equivalent is decreasing. So operating cash flow is negative, so it's not better for the investment. But the lending purpose, BSP is better for lending purpose, because BSP is investing in more profitable projects, positive cash flow each year, covering its all operating expenses, and it's paying dividend to its shareholder as well, and they have less contingent liabilities as well. Thank you. That's all for my today's presentation. Thank you so much.